We have a licensed investment and securities trading firm, Carrier Asset Management, is set to flow 3 new managed funds, a fixed income fund, an equity fund, and a balanced fund. The new funds will increase the size of Nigeria's managed funds market, which has been jumping in recent years. Still on Market Street, the Nigerian Exchange Group today announced its first half 2022 earnings, showing improvement in many of the key financial ratios. The CEO at Carrier Asset Management, Chukwu, joins me now virtually to speak to the next week flotation of the new funds and bite into the latest NGX results. It's dinner time, so mind my language there, Johnson. Sir, it's good to have you this evening. All the old fork and knife, take it to dinner table. Where are we? Let's start with the increasing number of managed funds flotation on the Nigerian market. What is this excitement all about these days?
Well, first of all, thank you, Bosse, for having me. It can be excused. I mean, today is Friday, so you're obviously thinking of the sumptuous meal this evening and throughout the weekend. What is happening today is that if you recall, the market crashed, the Nigerian equities market crashed in 2008, 2009. And following that crash, there became a compelling need for investors, particularly retail investors, to enter the market through some kind of collective investment instruments. That will, to some extent, help them manage their risk. Unlike previously what we had before the market crash, where retail investors who did not have full understanding of the intricacies of securities trading were so active or so bullish in the market. But now there is a new wisdom for retail investors to enter the market, to invest in the market through collective investment instruments like mutual funds. And that way, one day they're able to spread their risk, irrespective of the fact that they don't have so much capital to invest. They're able to spread their risk, and they're also able to enjoy some improved return that they would not ordinarily achieve if they had gone into the market on their own. So that's the compelling need, and that has created a window for more retail investors to come back into the market.
So, but why are retail investors always advised to use the managed funds or collective investment scheme window?
Well, a couple of reasons. One, they do not have the level of financial resources that will help them get good bargains. Two, they don't have the technical competence, and they don't have the resources to buy the research reports and the technical competence in the market. So they now need to go through, like mutual funds are like aggregators. They bring together different instruments of a particular class, and they provide investors that window to invest in those instruments by taking on units of those mutual funds. So that's why mutual fund is more attractive. It's recommended for retail investors, particularly those who do not have. For institutional investors, for HNIs, they have the capacity to engage advisors, financial advisors. They have the capacity to do some level of research. They have the capacity to, even if it becomes compelling, to lose money. But retail investors do not have those muscles to begin to play in the market in risky ways. And that's why they need to use some level of aggregators, which the collective investment instruments provide for them.
But for big markets such as the US, mutual funds or managed funds are very big. There are mutual funds that run into hundreds of billions of dollars around the world. So mutual funds are really big. But what are you folks targeting at Carrier Asset Management next week as far as the mutual funds, managed funds is concerned?
Well, our primary targets are the retail investors. And we're looking at those who are risk averse, who we are offering our fixed income fund. We have those who have moderate risk appetite, and therefore they need to take some risk for higher return. We're offering them our balance fund, which is a mix of fixed income and equities fund. And we have those who have more appetite for risk, and they are ready to bet on stronger earnings and stronger growth. Stronger capital accumulation, and we're offering them our equity fund. So we have a spectrum of risk profiles. Those that are risk averse go for fixed income funds. Those that have moderate risk appetite go for balance fund. And those that are ready to take on risk and are ready to get a reward of taking risk go for equity funds. So, but the primary target are retail investors who have pockets of funds, and that's why the units of each of these funds is going to be leveled and available to almost every Nigerian.
Okay, but what would these funds help an average retail investor to achieve under the current inflationary and weak exchange rate environment?
Well, as you know, equity funds always in the long run outperform inflation rate in the long run. Remember that when you're investing in equity, you're not investing to cash out the next minute. So if you're ready to, for the long haul, you certainly outperform the market. You outperform the market, you also outperform inflation rate. So we expect those who have the intention to grow their wealth and they're ready to begin to set aside some of their earnings today for future wealth accumulation, what you call deferred gratification, who are ready to forego present consumption for a much bigger consumption in future. We want to encourage the savings culture, we want to encourage investment culture, we want to encourage capital accumulation in the country, and we want to encourage wealth creation.
Yesterday, the SEC issued a reminder of warnings to Nigerians to beware of unscrupulous crowdfunding investment schemes. How do you respond?
Well, you may have observed that we've seen a lot of Ponzi schemes that are masked in form of crowdfunding. People come to the market and say they are selling metal instruments, they are into agriculture investments, and you ask them what kind of investment in agriculture again what kind of return you are promising. And they are using crowdfunding as kind of a vehicle to suck in a lot of investors that are undiscerning or non-discerning. So what SEC did is to kind of sensitize the public, investing public, to avoid investing in some of these so-called crowdfunding schemes if they're not approved by Securities and Exchange Commission. Because when you get into some of those instruments that are not in any way approved, you find out you have no recourse to anybody because a lot of Nigerians have lost money. And remember that when people begin to lose money in the economy, it eventually has a macroeconomic effect because there is loss of confidence in investment, there's loss of confidence in savings, and capital accumulation is constrained.
Okay, let's get your fork and knife into the Nigerian Exchange Group first half 2022 latest earnings. For me, I'm going to put a bit of those numbers up there for, I'm sure you've gone through the numbers very briefly, as it were. That's the performance review in terms of the Treasury transactions, income, listing fees, market data, rental income, and all of that. Those are some of the performance reviews. But if you look at the top end of the financial, of the earnings, you're talking about revenue, which grew about 140%, gross earnings, 138%, operating profit, a very hefty 273 million, EBITDA, profit before minimum tax and net profit there. Take me through these earnings. Facts. The NGX became demutualized last year. So this is the first full year of 2022 in which the NGX is pushing out its first half result. Talk to me.
Yeah, when I looked at the top line, which for me is of great interest when you are talking of an institution that has just done some level of transformation and is going into new areas, that's the primary area you look at, is it growing revenue, which shows you the prospect that the company has. And with a growth of 138% in gross revenue, from about 1.7 billion to about 4.2 billion, that was quite impressive. I've also looked at some of the figures you have actually displayed. Where are the sorts of growth? And like we said, in terms of market data, which is basically saying that it's basically an information-driven entity. It's actually selling market data to the investing public. And that is where it has the greatest growth, the strongest growth it recorded. And that, for me, should be indicators of where you should focus a lot more investment in. If you look at the bottom line, yes, there was a growth of about 82%, but we are still looking at a bottom line that was to some extent eroded by huge tax expense, which I think the management of NGX have to watch out for. As well as because you saw a profit before tax about 1.2 billion naira, only to go back with a figure that was materially lower than that in terms of net profit after tax. But all said and done, the most important thing that the company is now growing top line is growing revenue, and that if you sustain that trajectory, then investors in NGX should be ready to be smiling to the banks. And of course, we are, as a stockbroking house, as an investment house, also investors, shareholders in NGX. So we are looking forward to further improvement in returns, and obviously some kind of reward payment in the near future.
I know what you're thinking. You're smiling. You can smell your dividend at the end of the year. Okay. Let's leave it there for tonight. Thank you so much for your time and have a great weekend. Johnson Chukwu, the CEO at Carry Asset Management, and we wish you all the best next week on your mutual funds.